Our viewers, hello and welcome to Sansad TV. I am Tina Jha. You're watching Perspective. Infosys co-founder and founding chairman of Aadhaar, Mr. Nandan Nilekani, has emphasized the potential of land asset tokenization to unlock trapped capital, highlighting that nearly 50% of the assets owned in India are in the form of land, much of which is non-tradeable, non-saleable and ineligible for loans, making them idle assets in economic terms. So he suggested that tokenization can change this. He said by tokenizing each piece of land, it would become easy to trade and even use as collateral for loans. This would then open up a new realm of possibilities for landowners, allowing them to either sell their land or get a loan against it, thereby gaining access to much needed capital for business ventures or other investments. He further stressed that fintech-powered land monetization could bring an additional surge of capital liquidity, creating a new wave of economic growth in the country. Now, this suggestion by Mr. Nilekani has since garnered significant attention and attracted multiple views. But what's important is that the potential of tokenization cannot be overlooked. A recent McKinsey report estimates that tokenized market capitalization could reach around $2 trillion by the year 2030. Another April 2025 report by Ripple and Boston Consulting Group forecasts that real-world asset tokenization could grow from $0.6 trillion in 2025 to $18.9 trillion by 2033, a compound annual growth rate of 53%. So this isn't merely speculative. Real estate tokenization projects alone already account for $5.4 billion live on blockchain networks, with another $24 billion in development. Meanwhile, tokenized bond issuances have reached $12.8 billion across 8 jurisdictions worldwide. Governments globally are also capitalizing on this technology. The Monetary Authority of Singapore has established comprehensive guidelines for security token issuance. Hong Kong launched its Project Ensemble regulatory sandbox in 2024. The European Union is harmonizing its approach through the Markets in Crypto Assets Regulation, or the MiCA. And our own International Financial Services Centers Authority has released a consultation paper on regulatory approaches towards tokenization of real-world assets. Major financial institutions are already implementing tokenization solutions. HSBC launched its Orient platform for tokenized deposits in gold, while UBS introduced UBS Tokenize for digital asset services. The European Investment Bank has issued 100 million euros in digital bonds on the Ethereum blockchain. So the benefits are substantial: programmability, composability, operational efficiency, reduced transaction costs, fractional ownership opportunities, and enhanced liquidity for traditionally illiquid assets. By democratizing access to investments and streamlining processes, tokenization also aligns perfectly with India's goals of financial inclusion and digital transformation. To discuss further the potential, momentum, also the challenges on tokenization in India, we are joined by two distinguished experts. I'm delighted to welcome in the studio Mr. Anand Desai. He is managing partner of DSK Legal, recognized as a leading practitioner in India. Mr. Desai, glad to have you with us on this broadcast. Next to him is Mr. Tapan Sangal, the architect behind Kalp, which is a compliance-first blockchain ecosystem. Thank you, Mr. Sangal, for joining us on this broadcast as well. Welcome to Sansad TV. In fact, to begin with, and as we've already highlighted in the introduction, tokenization is gaining significant momentum globally, with projections reaching about $2 trillion by 2030. So for our viewers who might be encountering this concept for the first time, help us and our viewers understand what real-world asset tokenization actually is.
Well, real-world asset tokenization, as we talk about real-world assets, when we talk about tokenization, what we are actually doing is we are tokenizing the ownership, we are tokenizing the rights, we are tokenizing the claims. So, and when I say tokenizing, what I mean is we are digitizing. So what actually happens is that the ownership in the real world is already in existence. It's in the form of some or the other documentation that you have to prove that you are an owner of a particular asset. Yeah. But when you tokenize this, then what happens is that this ownership is transferred into a digital form. There is a whole process of tokenization, and these tokens that are minted on a blockchain are programmable. So what it means is, programmability means is that these tokens would carry within them all the aspects of that particular asset. So if it is an income generating asset, it would have the information regarding the income that that particular asset or that ownership makes you eligible to get. So this is what tokenization means. Tokenization basically is de-documentifying the ownership, if I may say so. So what we are doing is we are making ownership fractional. So you could have multiple, if the ownership is into one person, in the name of one person, he can create 2,000, 10,000 tokens, parts of those ownership, and then those parts, because of the token, also have within it tradability, transferability, traceability, and the most important part is that because it is on a blockchain, so it brings in the element of transparency, immutability. That means that anything that goes out there, there is a track, there is for everybody, there is a transparency for everybody to see what actually has happened, where these tokens have moved from where to where. So that's the power of tokenization. And when we talk about entering a digital world, this ownership needs to be digitized and in the form of tokens.
Okay, I must confess, since it's a new concept, it at the moment sounds very complicated. You and I, and through the help of graphics, we've tried to simplify it for our viewer, and we've sort of make it easier from a technical point of view to understand. But the legal point of view is something that we'll try and understand from Mr. Desai. How, from a legal standpoint, Mr. Desai, does this technology sort of change our understanding of property ownership and the existing rights? And also, how are these concepts being reimagined through tokenization?
So can I step back for a moment?
Of course.
If we look at ownership of a company, we had shares issued to shareholders. At one time, you had a share certificate. It has now become dematerialized. It's a digital form. You can now trade through a depository, which you could not do earlier. They keep track as to what's happening. They report to the company, etc. So it's broken down already in one area. In land records, we don't have that breaking down yet. Land records are maintained through title deeds, as we call them. The title gets transferred with the title deed being transferred with a proper registered document of transfer. You have other assets where you don't have necessarily documentation to support it. For example, a painting. You may have it for an antique. There's a registry for antiques in India. There may not be one for art. Coming now to the legal aspect, any form of transaction is regulated in any country. To understand who was the owner, who is the owner, who is a partial owner, who has what rights, could be a mortgage right, could be a lease right, could be a license right, could be a right to use. All this is typically regulated by statutes. Right. We have the Information Technology Act. We today have cryptocurrency, which is being looked at more and more. The IFSC in Gift City is in fact looking to digitize real-world assets being land. The Reserve Bank of India has actually used the same technology, tokenization, for credit card usage. So my credit card is not now exposed to the company which is actually going to take money from it. They see a code. So it's happening more and more. But to answer your question, yes, we'll require either a composite legislation, which we have for specific subjects. For example, insolvency, we have a specific statute. It may be also requiring amendments to different statutes, which could include the Contract Act, Transfer Property Act, Registration Act, Stamp Act. So we need to have a holistic view as to what all gets involved in the legal framework that is going to affect the era of tokenization which is upon us.
Mr. Sangal, coming back to you, because he mentioned the Reserve Bank of India, and we've seen that in this case, the Central Bank of India has already shown remarkable foresight with tokenization initiatives. As he spoke, over 320 crore transactions amounting to nearly 11 lakh crore rupees have taken place. Explain to us and our viewers how these early implementations differ from the more comprehensive real-world asset tokenization, and are there any lessons that we can draw from this successful approach that RBI has had?
I would say it's a great question. So what RBI did is, RBI basically was driven by security of the end users. So what they did is they shielded the card information of people, and it helped them in creating tokens for the purpose of payments. So what they have through tokenization sorted is, they have basically sorted the payment side of it. And now when we talk about real world asset tokenization, the layer that we are adding, so payment is part of the RWA tokenization. It's definitely part of that. But what we are also doing is, we are basically bringing in the ownership side of it. So the value capturing. So the value in any asset is what a token represents in terms of tokenization. So how it differs from RBI tokenization, like I said, RBI tokenization is about payments alone. It is basically driven by security. Tokenization of RWA is driven by value creation, unlocking of values, and also wealth creation. That's the difference.
Tokenization's potential is immense for the Indian economy. We've seen the numbers and the forecasts that have come in. But are there any specific legal frameworks or regulatory changes that will be required to fully capitalize on this opportunity that we are talking about?
So from a process point of view, currently, as you know, we have a lot of litigation and claims on land. Mm-hmm. And that partly comes from the way land is transacted through succession when somebody passes away. It's a huge issue in India because of the way succession works, and we've seen that for years and years. Similarly, when land is acquired by government or by an agency, so first of all, having land records completely updated is critical. Once that happens, then you know who the owner is. That is then a clear message to say, okay, now there's no debate that's going to happen on the ownership. Once that happens, tokenization can follow. Without that, to my mind, it's a minefield, because the issuer of the token may not have complete rights on the asset to start with. If you take a painting, again, same issue, who is the real owner of that painting? So from a process point of view, till the complete title is established on any asset that you plan to tokenize, I think it's a non-starter, because you will not know where to go in terms of a claim. Once that does happen, the framework will have to obviously build in safeguards. If somebody issues a token, whether it's an agency, a company, an individual, it's all open to them to issue tokens. What is the backing that token is going to have? We've already seen in some parts of the world, in cryptocurrency as well, it's based upon lack of assets, if I may call it that. If it collapses, there are claims. So who is going to protect against that? Gold is a great example to tokenize. It's an asset one can see, and gold reserves are understood around the world. Land, similarly, has a value that fluctuates. The land value depends upon who the buyer is and what he's willing to pay. There's a ready reckoner, which we have in most parts of the country, that tells you the value for stamp duty purposes, but that may not be the transaction value. So when you issue a token, that's an underlying value that can be attributed to it. The token holder can then say, take a position, yes, I'm buying, not buying at this price, just like stocks on the stock market. There's no intrinsic value in a share. Shares go up and down in value, depending on the trading ability at a point of time. Safeguards are there today for the stock market. We've seen those. You have SEBI, you have other regulators looking at it. You have Reserve Bank of India looking at money transactions. So credit cards are relatively easy, and we can see huge progress already.
Since you spoke about the safeguards, it brings me to a related question on some specific court cases, some legal precedents internationally, which are shaping the framework of digital ownership across the world.
So cryptocurrencies are recognized today in certain countries. Singapore is a front runner to my mind in terms of the cases they've had. The UK also recognizes cryptocurrency. Now the issuer of cryptocurrency or the one holding the wallet may not be known to actually serve a document on them or serve a court order on them. Courts in Singapore, Hong Kong, UK and others are today allowing service through a wallet or through a tokenization method. This way you at least get to the digital platform, which otherwise you cannot access, because it's not really a person sitting there anymore. It's a depository, if I may call it that, like your NSDL or CSDL. So this will change, and this will require regulation for sure.
Since Mr. Desai spoke about the safeguards, one thing that comes to mind, and we've seen ever since Mr. Nilekani made that proposal about tokenization of land, and especially in India, there are concerns and there have been differing views on how it might lead to concentration of wealth. So how are we addressing those concerns as well as we adapt or as we move towards this new technology?
If I may take a step back and just talk about a few things. We have spoken about crypto. We've spoken about tokenizing the real world asset. We are talking about unlocking the land value that people are talking about. That land value, when it gets unlocked, it is not only for the people who own it. What it does is, I use a word that we need to democratize the wealth creation. When I say democratize the wealth creation, the instruments which are available to the wealthy few for the purpose of investment, because of the ticket size, because of the accessibility, those instruments through tokenization can be made available to people at large. That's point number one. Point number two, while we are, just bear with me, I'll slowly come to each one of them.
Sure, take it.
Now let's talk about land, okay? As we know, in India, land is a state subject. I would say about 30% of the state revenue is from registration and from stamp duty.
Yes.
Now, those revenues are slowly going down because the number of transactions have gone down, or there is opacity, or there is something which people don't know. Now, here comes a technology which is blockchain. And by the way, blockchain and crypto, earlier people used to say in the same breath, which is not correct. Crypto is just one of the use cases of blockchain. Blockchain as a technology, let's just spend a moment out here. Blockchain is basically a ledger where each second, any info that you send to a blockchain, there is a block created, and then that block is a casting in the stone. You cannot change anything. If by mistake you've entered any wrong information, it gets corrected in the next block. So there is a traceability, there is a tracker for the entire transaction or anything that goes in. So, I'm sitting with a legal luminary, but if I may, we as humankind, we have created our life around proof of truth and not the truth. So the meeting of people is not important. The minutes of those meetings is important. And that's the reason where there are a lot of scams, because those minutes can be manipulated. Yes. Here comes a technology which can mathematically establish truth. You don't need a proof for that truth. So if a transaction has happened, it is casting in the stone, it is transparent, it's for everybody to see. So imagine what we are talking about, a technology which can seep into anything. Land record is just one part of it. And like I said, imagine because of the programmability, because of the transparency, because of the imputability, all the various arms, say a revenue department, a state department, stamp department, a land registration department, they all can participate into one set of ledger. Because of programmability, automatically the revenues for any transaction can go into their respective account at the source itself. So the automation of the entire transaction, and that too in an immutable way, is the power of tokenization that we are talking about. I give you another example. Distressed asset. Why only land? There is a whole lot of values which get eroded because of the distressed asset. When we talk about distressed asset, we immediately believe that if it's a distressed asset, I'll get it less than the value, the market value, because it's distress. If we tokenize a distressed asset, all the stakeholders, if there is a first charge holder or a second charge holder, there is bank, there is a debtor, there is a creditor, all these people can transparently come into one piece. The flow of the money, whatever gets collected, automatically gets transferred to each one of them. So that element of trust comes into play. At times, an asset has become distressed because there is lack of trust among all the stakeholders qua that particular. And so here is a technology that comes that can do that. And it's all part of tokenization. So from that point of view, tokenization is a huge power. In India, on the digital front, we have already established ourselves in the forefront. Our UPI is par excellence. Word, there is nothing like that across the globe. Our Aadhaar. So we have already established the ID. We established the payment. What needs to be established is ownership intelligence. So if ownership can be transparent and intelligently embedded into a tech, imagine what we are talking about. And it is not that it will concentrate the wealth, it will distribute the wealth. Because with 1,000 rupee token, a farmer can invest into an urban land based in Mumbai, yielding. So why not? So even he gets access to a wealth creating instrument. That's the power of tokenization.
I think going forth, Mr. Desai, what's important is to spread awareness, at the same time further strengthen that trust. How do you believe, or what steps do you believe going forward will be essential to strengthen India's tokenization ecosystem, particularly from the point of view of consumer protection measures?
I suspect you'll get a regulator like SEBI.
Yes.
You'll have a law similar to the securities law. It's a security, ultimately. They could extend the securities transactions law to that. They could have a new one. But the key, as you rightly said, is to make sure there's some underlying support to the system and it doesn't suddenly get pulled out from under your feet. So special law would be ideal with the peripheral amendments to the peripheral laws.
So what you're saying is we will need a completely new framework, or can we just strengthen the existing framework, the existing bodies, and this can flow into the existing?
We could do either. It depends how it's looked at, but it has to be composite, is my point. Whichever way you do it, it can't be a piecemeal and then we start picking up threads here and there.
Mr. Sangal, what specific sectors of the Indian economy do you believe will be the most transformed by this concept of tokenization?
I would say each and every idea of economy. So, like I mentioned, we have already sorted our payment. We have sorted our identity. What needs to be done is now, so logistics is a huge use case. Beside logistics, I would say commodities. Shouldn't a farmer be able to access the market directly if he's able to tokenize his yield, his output, and let there be a market for buying that? Of course, land, real estate comes very easy because we can see it. Gold, again, great. What about IP, the intellectual property? Even intellectual property can be tokenized. People should be able to generate funds by liquidating some part of their tokens and work and then buy them back. So this is another important aspect of capital generation. Access to larger market, both sides, even for the people who are tokenizing their goods have a larger market, and people who are investors can have new classes of investment by virtue of tokenization. So what is needed, and if I may just slightly venture into what you were asking him, when we talk about real world assets, all the law related to that real world is already in place. That asset class is currently being governed by a certain set of laws. What you need is a responsible innovation and a responsible tech development. The innovation or any new tech, at the end of the day, the mandate with the regulator is the protection of the investors. If a tech is developed like that it provides that kind of transparency, that kind of compliances, because through smart contracts, through oracles in the smart contracts. I'm sorry, I'm using a few words out here. So when we talk about smart contract is a code that is run on a blockchain, and that smart contract represents a rule qua a particular asset. However, these smart contracts are not that smart. They cannot pull information. Information needs to be pushed. Yes. And what is that information? a weather-related information, a particular yield for a farmer, if is dependent on a certain weather and his insurance claims and all, it should all happen automatically. Why should he go further? So if through a reliable, trusted third party, this information can go into the system, and all of that technologically is possible. Technology permits all of this. So what is needed is the regulators, the innovators, the lawyers, all to come together, see what works best for us in India. We need to create for Bharat. We need to create technology for Bharat, because we are way ahead in terms of digitization. In terms of today, I believe I was reading somewhere 70% adoption in smartphones is already there. So if we can have a mobile first kind of an application for the purpose of tokenization, and then all the securities, all the audits, because of the technology permits all of that is embedded into this tech, it would give confidence to the regulator also to permit you.
I'm as optimistic as you are in the benefits that this new technology holds for us. One question that comes to mind is India's diversity and the diverse literacy levels. How will we ensure that tokenization platforms are accessible to every Indian, no matter where they are residing? So basically, on the point of equitable access for tokenization platforms, what are the efforts that we have to make?
We cannot succeed in tokenizing if we don't cater to all of this. So as I mentioned, the technology, underlying technology remains unseen. Nobody needs to know about technology. Technology is there for the regulator to see that, yes, that technology is there. The front face, the user face has to be as easy as today he's using a WhatsApp, or he's using it. It needs to be language agnostic. It needs to be now with AI embedded into it. Anything is possible. So with the help of AI, the accessibility in terms of understanding what's happening, in terms of protecting the interest of the end user, and also adoptability. For adoption, it has to be as easy as using a WhatsApp. Like today, you scan a QR code and you are sending the money. We know, even a small sabji wala is using. So when it all started, that time also these questions were there, that how would they understand it? So it is the tech per se which actually made it easy for everybody to adopt to UPI, the payment system, even the Aadhaar system. And luckily in India, we have a very strong TPI infrastructure in form of the Aadhaar and UPI. All we need to do is now use that, bring that, and add the layer of blockchain along with programmability. That is not seen by the people, but they use. So if they can see that there is a token, there is building there. So just to tell you, before even tokenization, there has to be a whole lot of due diligence for that particular asset. That asset needs to be logged in the real world, so that there is no duplicate sellings. So there is a digital word and there's a real word. So there is a whole lot of legal engineering that we need from luminaries like him, that makes sure that that asset gets logged in the real world. When we talk about gold, there has to be trusted third parties which not only make sure, and they all are custodians of the token holders, not the sponsor or the person who's tokenized.
Trust me, Mr. Sangal, there is no skepticism on the success of this technology. The question here is only about the adaptability of this new technology, how we're going to make it popular among the masses. DPI was a success story. We need to replicate that in this case as well. So what is the roadmap so that we're able to put the best step forward? And in terms of legislative measures, are there any drastic changes that we need to make to bring about that kind of transformation?
Yes, you will need changes in the law, no doubt about it. It's a new technology. It will need regulation. That's clear. Yeah. If I can look at the various components of today, what happens across India and what we are looking for, again, to give it context. Today, people put money to fixed deposits in banks. We know that. People take loans against gold that the family has. and there are NBFCs, etc., that give loans against gold. It's a established market. People understand how to do it. A bank knows the rate of interest they're paying. The person knows the rate of interest he's getting. It's a debt instrument. The bank in turn lends forward to businesses, etc. Gold, the family uses the money for their own purposes. Now take a situation where somebody wants to put in 1,000 rupees that he's got extra. He needs the education where to put it, undoubtedly. He may not be sophisticated, undoubtedly. Right. But if there are cooperative schemes, for example, which we have today, which allow sophistication to be brought into each one's life by necessary expertise coming across the board. But take a better situation for a farmer, and we've seen this happening over the years. He has a potential to grow a crop. He has a potential to grow a crop in a cooperative format, where a larger group of people come together. They can even process that into processed foods, etc., to do a value add. Now, if he can actually start effectively discounting, if I may call it that, through tokenization, say for 3 years, that we as a group of people are going to grow tomatoes, for example, in this area. We expect it to yield X number of tomatoes. We expect it to result in so and so processed foods. And I tokenize it today. It's a great way to raise money against a futures option. It gives them then the money to actually bring about a good crop, fertilize it, water it, etc., in a very different way to today. There's no interest. Today when they take a loan, there's interest mounting for them. Tokenization, there's no interest. Someone's sharing your risk. So there are multiple ways of looking at it, from the back end, front end, etc. But yes, it'll require regulation so people know what they're getting into. When things go wrong, which they do, what's the remedy?
So the conditions apply is something that we'll have to understand in detail. But Mr. Sangal, how do you balance innovation to the robust security which is required in the tokenization ecosystem, and particularly in the Indian context?
So I can just give you an example of how we've done it. We are regulated by design. When I say we are regulated by design, what we have done is we have created something called a compiler. What it does is any smart contract that gets deployed, if it is not aligned with the law of the land. So when I say law of the land, supposingly you are, in India is a regulated environment. There are sectoral regulations, there are industrial regulations, there are state-wise regulations. If you are working in a particular state which says that the land cannot be owned by the people who are not native to that state, then through KYC norms, and if you are aware a person who's buying it is not a native of that, the law says that he shall not buy. So the smart contract should also not get deployed if the person, because of his KYC, is known to be not a native of that state, then it should not happen. And that's how the kind of tech that we need for the purpose of this real-world tokenization, because real world has real problems. It's not digital problems. And those real world problems or real world laws or real world regulations need to be embedded into the tech. And believe me, because when we talk about programmability, that programmability is rule-based. And those rules are nothing but, so just to give you a very raw example, if I am tokenizing, say wine, ideally less than 18 person should not be able to buy that. It's a very crude example, but just to try to explain that. And here is a tech which can actually create rule-based functioning workflows so that the rules align with the law of the land, and it gives the satisfaction to the regulator also, even the users, and the compliances are all automatic because it's all transparent. So that's the kind of tech responsible innovation that is required. I could tokenize and just keep it free for all, but then that doesn't work. And that's exactly what happened in the crypto world, because it was free for all. In each market, there are people who try to manipulate that market. What are the safeguards out there at that point of time? And these are the very safeguards that needs to be built in. Now, everybody is saying there is a regulatory activism across the globe. Each country is saying that my data is my thing. What about, so what we have done is we've created something called subnet architecture, so that a particular data should remain in that particular subnet only, and there has to be gatekeepers who who decide which data to go out, which data not to go out. Similarly, there is something called zero knowledge proof, which we are, by the way, doing through Aadhaar also, where I need not disclose my entire fact. So same thing is available out here. So if a person of that identity is immutable and it is established that this is this person, the rest of the information should be on a need-to-know basis only, wherever. So all these things are possible in this tech, and we are embedding them.
So what I've understood from the discussion and the way you've shared your insights, the benefits. I can tell the viewer that the benefits far outweigh the challenges and the hiccups in this case. What's worked in favor of India is that in recent years, we've seen technology as a great enabler in our lives. It's made our lives quite simple, transformed our lives is what we can say. We hope this technological tool is something that adds to the transformation, accelerates the pace at which our lives are changing, and brings us closer to our vision of Viksit Bharat by 2047. Once again, thank you, Mr. Sangal, Mr. Desai, for your time and for your valuable insights. And to you viewers, thank you very much for your time as well.